Hello guys, glad to have you on board again today. I hope you're enjoying those daily videos. I know they've been quite becoming a little bit longer recently as I've been speaking for almost an hour each and every day lately. I'm trying to spend as much time as I can to get the most valuable educational content out there for free, and always will be. Just to remind that, and because this is really important to me. I'm not the kind of guy who are just trying to get you engaged into some free thing just to sell you some stupid VIP pricing later on. It's nothing close to that. This will always and forever be free. Information has only two prices to me, either the infinite or zero, and I made my choice. It's going to be zero forever. So anyway, that being said, let's just get back to this educational content as usual. I'm going to give you the reviews I have, and starting with the cryptocurrencies. First, we're going to have a look at the daily chart time frame, see if something pulls out of it. And from what you can see, yesterday was kind of a down day, but doesn't necessarily seems that this is the end of the world either. We're just still into a bullish perspective in terms of daily chart time frame, yet the oscillation remains bearish, but the momentum itself is still bullish. We're working around a support area on the Bitcoin, and from what I can see, it's about to work just fine. So today candle will be interesting though, because after a big down day, we should expect some kind of a lower shadow candle today. So this candle is still ongoing, so it's pretty hard to make an analysis out of it. But in terms of general reading, if this is a trend, then we should normally find some support nearby. The fact that we're having a neutral momentum, it's been going to negative values, so it's been retracing down to zero. It's supported by the trade line. Trade line is still far below zero, which means we'll still have plenty of room to keep it on going with that possible upward trend. We're still having some higher pricings, resistances we could test, 8,700, 8,900, 9,000 area, and eventually 9,300 could be tested on a very extreme point to me. But that still means that we have some upward potential. We'll still have some bullish momentum into the daily chart, and we have reached out to a support in which buying could be really interesting. This is what I've just done this morning. Not exactly at the bottom, but I got this price right in here, so not at the best possible price, even though, and we'll see that, I could have taken the best price right at the bottom if I just made my analysis a little bit earlier, but to be honest, at 6 a.m. I was still asleep. Anyway, the general cryptocurrency sector, including the altcoins, have been suffering during the night, and from what I can see, Ripple is already pulling itself out of it by a plus 4%. Might be a news helping this somehow, as it is already positive when all others remain negatives. But we're going to review those as well, so they've been breaking some interesting buying entry signals that I've been taking yesterday. But even though I'm not changing my mind about the fact that this is still a buying opportunity right now, regarding the altcoins, not a buy the bottom and keep it forever, not the buy and hold kind of thing, anything close to that. But the fact that just like we did back then on the Bitcoin, I think that support is about to hold one more time and might produce some kind of rebounds. Not the fact that we've been seeing those decorrelations between the Bitcoin and the altcoins, absolutely in favor for the Bitcoin. It's been favoring the Bitcoin's pricing upward, where the altcoins just remain to low pricings. Doesn't mean that the altcoins will obviously go down. What the Bitcoin can mean, they can both go up. And generally that's what we call the divergence pattern. Whenever we create a divergence between two generally correlated assets, which is clearly the case regarding Bitcoin and altcoins, when you've got decorrelation, it's what we call price distortion. It's just like we do usually, and generally it follows a pattern. So I've been sharing that pattern to the French users, but I'm not pretty sure I've been doing it to the English users. So I'm going to just at least just presenting it once again, so those who are already aware, if I already done that, then you're just going to have some kind of a review, and if I didn't, then this will be the first time you'll hear this. So generally, when we do have some patterns like that, what we generally do is that we keep on the starting point. The moment where the two assets start to decorrelate, okay, when the positive correlation is not nearly close to zero, which means one of the two assets is moving faster to the upside than the other, they're still moving according to each other, which means we've got bullish cycles in there, bearish cycles, and regarding the asset. But in the bullish cycles, one asset will be a lot more performing than the other. This is what we call decorrelation. Yet both are heading to positive cycle, but one is a lot more beneficiating from those upcycle than the other, which creates decorrelation to assets that should move along. This is what we call, it generally looks like that. It means that the bullish potential is narrowed to the asset that is losing money in profit to the one that is taking that money, and generally the one that is losing money is eventually going lower or just not moving, when the other is really well performing, just like we've done with Bitcoin and altcoins. Really not doing anything on altcoin is really performing on the Bitcoin. Generally, you got the reversing point. When the decorrelation has been far enough, it cannot hold anymore, and the assets, as they are generally correlated, will have to recorrelate at some point and get back to mean, return to the mean kind of action. And generally, when you have that, the time you spend to decorrelate is representing 61% of the time that the asset will make to recorrelate. Let me just set things straight. What I'm going to use in here is the Fibonacci time. Okay, so if you consider this being 100% time, okay, generally the recorrelation phase is going to occur at 61.8% Fibonacci. Okay, so it's 61.8. We're going to set it blue or green, so you see it. Well, okay, that's how it is. If you consider this as being 100% between the point we started to decorrelate to the point we are going to recorrelate, generally the decorrelation phase is taking 61.8%, which means in here we have the remaining 38.2%. Okay, you can see Fibonacci is really something that you'll see a lot in trading. And generally, the recorrelation phase is then depreciating the asset who went upward pretty high, but the asset who has downside pressure from that decorrelation is going to beneficiate, but it's going to beneficiate faster, at a faster pace than the one who done in the first place. So let me explain that. Actually, the 61.8% ratio is occurring twice. Okay, so in here, you've got it through time and you've got it through price, which means in here, you've got both this. Sorry, I'm not going to use this one. I'm going to use 6 and this. Oh, damn it. I'm going to use the damn template. So it's going to be basic. Yes. Okay, so this is the way you do it. I'm going to use the same colors. Okay, so that's how you do it. Generally, the starting point will be 38.2%, and you're going to end at 61.8. Okay, which means anytime you've got a decorrelation, if the assets have been beneficiating from that decorrelation to the upside, which we've been doing in here, when we decorrelated, the Bitcoin went faster to the upside, so the correlation is benefiting to the upside. Generally, when we have that, means that both will terminate higher. It's just that the first one will benefit from the initiating point of the correlation. The second asset is going to fastly beneficiate of the second part, that is recorrelation, because the second part is going to be faster, even though this asset in the end will terminate lower than what the first asset went to, okay, but the first asset went to at a lower pace. If you compare those two, this one is faster and steeper. So this is the thing you need to take care of, because this is the pattern I'm taking care of right now when I do trade Bitcoins and altcoins. I still think at some point they're going to recorrelate to restore normal pricings and normal value, and that this short-term period of decorrelation was just meant to both make them pump, but not in the same time. It's just going to call it artificial pump. It's not something that is going to last because it's a price distortion. But this is why I keep on thinking that we're going to dump this in the end. But that first Bitcoin went up sharply, but the altcoins will probably do as well in an even sharper movement. But we're not going to get as high as the Bitcoin. Do you really get that point? Because this is really what you need to figure out from the pattern I just shared with you. The fact that Bitcoin went there with a sharp pace, yes, but we're going to do it even faster regarding the altcoins, but we're not going to get as high as the Bitcoin will be. Bitcoin will probably get to 76 or eventually 85.4% retracement of the previous bearish impulse. I don't expect altcoins, and let's take the altcoin index I'm using. I really don't see the altcoin index doing anything close to this. I mean, altcoins will probably get to a fast pace to the upside in the next following days or weeks, and I don't see this lasting for more than a month. I generally expect this to lead us toward the final weeks, let's say the final third of the September's month. So I think nearly third part of September, of August, so leading into September, is probably the moment I think the recorrelation phase will terminate. Okay, this is the correlation phase. So once again, remember what I've just said before. If this is the point we're started to decorrelate, which is actually the case, and we actually even started there, but I would say the decorrelation phase somehow was already taking place in there, which leads me to believe that we started here, probably going to terminate into September, which means the recorrelation phase is approximately there, which means at that point, normally Bitcoin is going to suffer from the decorrelation, from the recorrelation, where altcoins are going to benefit from, which means at some point right now, we could still be in the phase where, I didn't say end of September. I said, for example, 20th of September. So at that point right now, I think we're right in the timing in which altcoins should benefit from the recorrelation phase. But what we said is that basically if I'm targeting that price to be in here, I'm going to put an Alt V line, okay? So I've got Alt V line at the beginning, okay? Alt V is just setting a vertical line into TradingView, okay? And now what we said is that normally the pace we had into Bitcoin, okay? So at that moment, altcoins just done nothing, where Bitcoin got like that, okay? And remember what I said, I think altcoins will just do faster but steeper, which means to me, this is what altcoins are about to do. It's not going to go higher than what the altcoins have been doing, which this is the reason why I think we're not going to forecast more than 50% to 61.8. So really, I don't think the altcoins are going nearly close to this. But I think for some reasons we could just, God damn it, what is this? Yes, I want the basics. I think we can nearly retrace to 50%. That will be a decent level. And as you can see, the pace will be steeper, yet we'll do it faster. Okay, it's just we're going lower retracements, so we're not going to be as big performer as the Bitcoin will be. Okay, which means in the end Bitcoin will have been higher, but yet I think right now altcoins are going to benefit from that decorrelation. So we'll see if the future proves me right or wrong. Obviously, this is just a pattern. It's not something that you can use and working 100%. If any pattern in the trading world was working 100%, believe me, I would already know about it, and I will be trading just that pattern, which once again is just a dream. It's not how it works. Any single pattern cannot do that. I mean, it's not how it works. Every pattern includes risks, which means some pattern will work sometimes, some will doesn't. And that's how it is. But I'm using this pattern because I know it, and I think that it's about to be profitable regarding the altcoins, even less in the Bitcoin, even though I've been buying Bitcoin this morning again, right on that blue area, and that we're going to restore and getting back to Bitcoin. This is why I think we found the reversing point right now, is because altcoins have been doing pretty worse right now. We've been retracing back to support. We've been taking down stop losses, and I think now that everyone thinks this is the end, it's about time to buy. I think that right now, Bitcoin is still going to benefit from that upward movement, but not that big. So I expect some upward movement toward Bitcoin, which I've been buying this morning. And I'm gonna get back to why I could have taken the perfect price. Well, actually not, I couldn't, because the actual price right in here was slightly below. This is the price I would have paid, actually, which was $7,441. We nearly have tested that price, but didn't get to it. Which means we could still go one more time lower. I wouldn't necessarily be surprised. Anyway, consider this as the big supports where we left some volume behind, and we could very well go there just to test those two prices because of price demand. So we'll see about that. But anyway, I think right here we've got really strong support in terms of Bitcoin right into the expected blue range area, which we've been talking about yesterday. So we finally made it. I mean, we've got in there, try to find some bullish support, fail it, so we went all the way through the DOM areas. I've been trying to buy the bottom of that DOM area regarding altcoins, not the Bitcoins, because this was a technical area, and we could very well have rebounced in here, but we're not, which means we're going to have to range a little bit more, so which means we're going to have to sell the red area once again, getting into the DOM zone, and if we ever get out of the DOM zone, not crossing it, and getting back to the red area, normally we should have one more bullish trend, final trendy move, in which, as I said, Bitcoin is not going to be the well performer it was before. Going to have a very slow pace in terms of Bitcoin. This is where I've been putting more money into altcoins right now that I'm doing into Bitcoin. To be setting things straight, I'll just give you the numbers. I'm not going to show you my Bitstamp account for some... I mean, some people have been telling me, Phil, just don't do it, don't take that risk. It's just that so many people have a really weird imagination today and can figure out some ways to fuck you up just doing that. So I'm just not going to do it, to just avoid making some stupid mistake or whatever thing that some users might be using some way just to troll or fuck me up. So I'm just don't want to take that risk. As usual, the things I'm sharing with you is not something I just use into trading. I mean, I'm managing my life the same way. I'm not ready to take that risk because I've got nothing to reward from it. Okay, so I'm going to give you the numbers just the way they are. Believe me, once again, if you're just doubting the fact I'm a real trader or whatever, just move away. I mean, what I've been sharing with you is just doing it for free. So if you think the content is not valuable enough, if you have doubts about me, just get the fuck away. I don't really give a shit. I got nothing to prove, and so far I think everything I've been sharing with you guys should be more than enough to prove the value. But anyway, moving on. So what I have right now is this. I've got a 10,000 account regarding cryptocurrency sector itself, which means this is nothing close to my entire value in capital, which is approximately 10 times this, including only the volatile assets, the mobile assets, so nothing real estate and things like that. So consider this. So I only have a tenth of my capital into the Bitstamp account. Okay, so it's 10,000 out of 100,000, which means it's 10%. So even though what I decide to invest into cryptocurrencies is by default a tiny percentage of my capital. Okay, so first thing first, it's approximately 10%. For now, I expect to go approximately 15% in the end, but not right now. I'm testing the market at that stage. I'll go 15% if it goes as I expect. Out of those 10,000, I'll still have so it's yeah, we're gonna do it that way. It's in euro, so don't count it in dollars. So I'm buying bitcoins and cryptocurrencies with euros, as I'm in eurozone for sure. So this is what I keep in cash, which means this is in euro. Okay, this is all I have in my account. I still have 5,500 euros, which means these prices, these euros, are still potentially to be invested. Okay, I don't want to invest those because I think they can. I still need to keep some cash available. So then, out of it, I've been putting $500, 500 euros into BTC. Okay, which means, as you can see, it's not that big of a deal regarding BTC. I still think I can make some money out there, but not that big amount of money. So 500 euros, I got 1,000 euros on ETC, ETH, sorry. So I've got this regarding ETH. I've got 1,000 euros regarding XRP, and I got, sorry, no, it's 7,100. No, I'm telling you shit. No, this is here 1,000, and I got 500 in Ripple. Oh god damn it, IOTA. Okay, so this is what I have in IOTA. Okay, so as you can see, it's not that big of a deal right now. All I have is 3,400 euros invested into that market. And no, there's 1,000 out there. What I've been doing? I mean 1,000. What have I done? No. Oh gosh. I don't have 6,000. So just let me give a pause. I'm gonna go to the. Yeah, sorry, my bad. I actually do have 6,000 in cash. As you can see, you got it right here. So you see, I'm not lying. I'm not just gonna show you the account. As you can see, you got the balance in here. So it's actually 6,500 euros still left available for investment. So this is the one I keep for reinforcements when we'll get to actual validation. So this is what I have right now, and as you can see, this is not really the big of a deal, and I'm not really fully invested into cryptocurrencies. And the way I do it is a little bit more regarding ETH. So I've got 3 times the bitcoins in Ethereum, which this is the way you should see it. I mean, previously I was Bitcoin only, and I was just barely trading the altcoins. Right now I'm into altcoins mostly, and just tiny BTCs against those. Okay, I'm only trading the gains I've been making regarding bitcoins. So just to set things straight, these 10,000 euros is nothing close to out of my investment. It's just the CFD contracts I've been selling on bitcoins recently. So all I invest into Bitcoin is all I took away from it to the downside. Okay, so it's just for an investment perspective. I know trading Bitcoin and cryptocurrencies in general is very risky, and if ever that thing was to worth 0 at some point, which I don't believe is possible, but yet still everything is possible, if for some reasons the cryptocurrency sector was just to fall apart and worth shit, I would never have lost anything that I haven't gained out of it. So I'm fully financed by the gains I've been making in there. And of course, what I'm doing right now is that I intend to get the extended 5,000 euros I want to invest in there. So you got my trading psychology in here. You know what I intend to do. I intend to take 5,000 out of it to just get to 15,000 euro to buy the lows and hold. Okay, so this is buy and hold I intend to get in the end, but once again, I don't want to put a single euro of my own money in there. I just want to invest the gains I've been taking away from the Bitcoin. So anyway, that is the strategy. Now I'm going to move on to other assets out of cryptocurrencies, but I just wanted to share with you guys the scenario I have right now regarding altcoins to bitcoins, kind of recorrelation pattern that could take place in the next following 2 to 3 weeks, leading into the 4th and let's say 20th of August approximately is the way I've been forecasting this. It's what it should approximately head toward two. Regarding the current recorrelation pattern, the one I basically been sharing, I mean, this is really the way I see it, and this is really how I went to create that pattern out of the Ethereum's, out of the Alcon index. Starting from there, if we were about to end there, that is what gives me the precise 61.8 timing in there. Leaves me to believe that this recorrelation phase should lead us into approximately 21 of August. I generally don't do this. I mean, you know me, all the guys who are commenting about giving commands and sharing commands about I know it's going to happen this day at this hour, I generally say, okay, cut the bullshit. It's not how it works. I mean, there's no timing into the market, and there's no way to predict a date to get into doing some kind of action. Okay, so generally I don't do timings, but in some specific patterns, I've been seeing some patterns through time. So on very rare and specific things, I do use timings, but just be aware of this. This timing is nothing close to being something I'm sure about and sure of. Can very well not be there anyway, but I intend in my mind, when I project myself through time, for that pattern not to last more than 3 weeks. Okay, so this is just what I wanted to say, just to set things really straight. I think this pattern won't last more than 2 or 3 weeks, which leads me to believe at the end of that pattern we're going to restore the native bearish cycles of both assets. Cryptocurrencies in general, Bitcoin and altcoins, is probably about to recorrelate nearly the end of September, and we're probably going to have to suffer another bearish cycle afterwards. So that's the scenario I've been sharing regarding Bitcoin recently. I mean, going up for a few weeks, finding some bears in there, and then getting to another bearish cycle as expected, in which I'm going to be a seller out of Bitcoin and altcoins as well. I mean, in that case, I'm just going to sell Bitcoin, but you can sell anything you want. Basically, everyone is going to fall apart if I'm right, because we've been decorrelating to the upside, leading us to this, creating some artificial rebounds, but we're probably going to have to suffer an entire market cap drop afterwards, recorrelating Bitcoin and altcoins. They've been moving separately for some short period of time, creating that artificial pump, and we're going to have to dump afterwards. And I think the dump is going to dump us to lower lows, but this is a pattern you already know about. But just for those who are watching that video for the first time, this is basically what I expect to have. And I expect the next bearish cycle to be kind of brutal, at some point even brutal, or even more brutal than the one. Just compare it to this. I think we're not going to have that much of a pullback. We're just going to range for a few bars before getting lower. But at some point, I think this is going to be the most brutal cycle we had. So even faster than that in terms of pace. So again, I don't do timing, but I do pace. Okay, because pace is related to psychology, and when you get to trading crashes, psychology is the fundamental effect. So consider it that we're going to go even faster than this, faster than that. So this one's slower pace, but probably this is the kind of pace you should expect, going from all the way here to here. Expect something that is first moving slowly and then brutally and drastically downward. Okay, so this is really the way I do see how we could make it. Going down, ranging, falling apart, and then doing nothing for literally the end of that year before restoring eventually the bullish trend in the end. Okay, and this is what I've been forecasting since we were up there. I've been reinforcing that scenario right in here, right in here, right in here, right now. So I'm still forecasting what I've been seeing since the very first fucking day I put that scenario in place, and so far it's been working just fine. And all I see right now is nothing close to a bullish signal, but more likely heading slightly higher and before getting another dump. So we'll see about that, but for now, as long as I haven't been proven wrong, this is what I intend to trade in the next following weeks. So just putting some upside again, and then probably going to have another drop leading to the end of September. Moving on, so we're still having the same problems regarding gold and things like that. I mean, Apple yesterday was a total non-event. I expected the numbers to disappoint. They were disappointing, but they didn't disappoint the markets. Worse than that, the market just been buying that shit. Just gonna review this right now. I'm gonna go investing. Apple. So Apple is up by 3.5%. It's trading historical highs, and from what I've been seeing recently, I'm going to give you the review I have out of this. I think actually right now Apple is pretty close to some kind of pricing we had on Amazon, which means Amazon have been. God damn it. Sorry about that. So regarding Amazon, we've been opening at the high, historical highs, and since so far the highs have been sold right on the up part of that trend channel. So you can expect pretty much doing the same, I think, right now, about to come with Apple. I mean, Apple is just trading the exact same thing. It's not the it's not a trend channel, but this is something close to it. It is this divergent wedge structure, and I expect the market to just go trading in here, and this is what it's just about to do. I mean, we're opening in near those prices. As you can see, we're trading 97 approximately. We're going to pretty much, I think, open in here, trading 98 and just drop. So for some reasons, I think Apple doesn't have that much of a bullish potential right now. More likely having some dangerous bearish potential in the next following days. We can go slightly higher, but I think that red area is about to be sold no matter what, no matter how. I decided to take and remain bearish on Apple before the earnings release because there was a risk for those early those earnings to disappoint the market somehow. And just to set things straight, they're not good. We're gonna go there, so you guys will be able to see it. So this is financial profile results. So I'm gonna you can do it on an English perspective. So yes, actually, we've been upbeating what the market was expecting. Yes, we were expecting 52.3. We've been doing 53.3. So it's basically $1 billion ahead of what was expected, but yet it's still below the previous results of Q2 and of the second quarter. It's still far below the last quarter of 2017, which means profits are going to the downside. EPS as well. I mean, we are 2.33 on EPS, even though analysts were forecasting 2.16. Just the fact is that EPS is going down 3 quarters in a row, 2 quarters in a row. Profits are going down 2 quarters in a row, yet we're at a higher pricing. So let's set things straight. We're always pricing from a year from the previous quarter, the year before. So we're comparing this quarter to this one, which means obviously right now we're higher in terms of both profits and EPS, which means it's normal to see the stock price going higher into a 2-month perspective. Because what the market is trying to price right now, is supposed to price right now, is where we should be 1 year ahead. So this is what Wall Street's golden boys are trying to sell you right now, the fact that a year ahead from now, Apple is going to be even expensiver than it is right now, even more expensive. I don't think it's nearly close to be the case. I think this is stupid, the most stupid ever kind of behavior, trying to forecast prices 1 year ahead, just thinking that we're going to keep on moving higher to the same pace, which is, to me, obviously not going to be the case. Not to say that as we are narrowing the profits and EPS, at some point we can keep on buying shares. I mean, the share buybacks program and things like that, just to keep the price higher and prevent the price from reaching any support. I mean, at some point, it's not going to last forever, because anytime we're going to make lower lows out of a year of profit, and this is about to happen, because let's set things straight. Until and unless the next quarter is making higher profits than $61 billion, we're going to have the 3rd fucking quarter in a row with bearish outcomes, which means we'll have find the profit tops. It means we're never ever going to get there again, which means anytime soon we'll have a negative return out of a year, which means price will have to go down. So it's kind of a ticking bomb that we're trying to send from hand to hand, just to pass it to the other player as fast as possible until it explodes into your hands. So you don't want to be buyer of Apple, just to be straight in here. You don't want to be a seller aggressively either, which means we can just range the current price area for a bit before going to the downside. It's just, I think, a matter of time, about the 6 to 12 next months to be bearish. It's just that right now the market just want to hang up in there and work out the price area. I mean, I got nothing against that. What I would like not to see instead is to see some nasty bubble creating and forming out of it. I mean, if for some reasons Apple was to accelerate and extract from the upside from that wedge structure, I would really be disappointed, because that will mean the market is going into crazy fucking bubble kind of trading after already being a bubble itself. I mean, if you have a look at this is nothing close to a normal pricing, unless this is a good pricing. I think we will have decent supports. But those supports are pretty fucking far away. I mean, even though the first monthly support is the one we've been trading back in 2 years ago. I mean, in 2 years we've been doubling the price, not doubling the profits. Okay, so it's not normal at that point to price that higher. The market wants to remain at those higher pricings, but I think in terms of trend, maturity, I think we're probably there. Not to say at the worst we'll be there, which means we could have some upward potential, but that isn't going to be the big of a one. Anyway, I think we're going to the downside regarding Apple, and that the end of that trend, if not already, is nearby. So I don't suggest you should buy Apple, nor you should buy Amazon. I think those two really needs to be taken profit, at least half of your profit if you've been a buyer of those, even more if you were a long-term buyer. I mean, the long-term trends are probably over or nearly about to be. You don't want to wait for the price to go lower just to get out. I mean, that's not how it works. Normally, you're supposed to fix a target, set a target, and whenever the price gets to this, you just take your profits and walk away. But right now, it feels like people and investors are just saying, okay, we're just going to let it go and see how high it can go before it bursts. But just to be straight really forward in here, if you play that dangerous game, what you are risking in the end is just to get out at a lower price that you will do if you just take your profit at the expected target. So if you had a plan, just follow that damn plan. Don't wait for the price to collapse before getting out. That's not how it works. That's how stupid trading works. And if you want to get nice gain into trading, you always need to have a plan. And whenever you reach out to the target, I think 200 is clearly a target, but I think we're going to fail below that target. And as I said, 98 could be an interesting price. So anyway, I'm going to have to move out for lunch. So I'm going to pause that record and restore it when I get back. So finally back from lunch, we're going to keep on doing the analysis on Apple. So as I said, I think still some pretty much upward potential, but not that big of a deal. Option number 2 will be finding some retail support. I mean, if the retail traders are buying this for no reason, once again, there's no really reasons to pull the price forward for multiple months. So in a 6 to 12 months ahead projection, normally we shouldn't be higher in terms of pricing, but yet, as I said, chaos theories out there. It's just the market can go higher because no one is selling anymore. As you know, Apple is pulling on with the share buybacks program. They're also having a pretty incredible cash flow. And the CFO, the Chief Financial Officer of Apple, clearly already said, we are not yet over with the share buyback program, as we have a lot of cash to spend in there. So they're going to keep on buying those assets. If we combine this with some potential retail traders buying this just for some usual stupid reasons, people are having some spare money, they want to invest, they're just asking simple questions like, what do I want to invest into? Okay, I have an iPhone, let's just buy fucking Apple. I'm using Amazon, so let's buy Amazon. We could really well have that kind of behavior in the next following month. And if that's the case, I think those who are long-term buying will just let go and let the bubble create. And if the bubble actually goes to creation, I think I'll have to make the same choice as a bearish speculator, to let it go, take the stop losses, and wait for a crash to occur after a speculative bubble. just to be straight, right in here on Apple, we doesn't have really a speculative bubble. All we have is an overpriced asset at risk to see some downward movement at the end of an economic cycle that might be more than probable. So at some point right here, greed wouldn't necessarily be the most rational choice. Taking profit on a long-term trend is the only rational choice, but retail traders are not doing anything close to rational decision. They're going to motivate their decision out of greed, out of easy money. And if they, for some reasons, forecast that Apple is going to go higher forever, and for example, reach out to stupid targets like 220, 250, I mean, at some points, only creativity is the limit. And as I said, the most stupid are the investors buying the prices, the most stupid the price reactions will be. And if retail traders are jumping in, and I think there's a tiny possibility to see that happening, but not necessarily going to be the case. So I'm not going to play that card right now, but if for some reasons Apple were to dynamically install candle closes above that wedge structure, I would pretty much start to worry if that wouldn't be necessary to just take the loss, just let them do stupid pricing and just go to double down at higher prices afterwards, meaning let them do the stupid shit bubble, and whenever the bubble will be ready to burst, could be 20, could be 220, could be 250, but could very well be 300 as well. I mean, as I said, creativity is the only limit to stupidness into pricing. Of course, all we'll make in the next following, let's say, semester, that's the 2 next quarters, as I said, I don't see that much time ahead to pull out the bubble trading, which means anyway it's going to end bad. It's just how high could we be able to go before falling apart. And anyway, whenever we'll drop, and that's inevitable, we'll drop lower than the current pricings in there, which means even if we create a bubble, the fall apart price afterwards would just be even more brutal. So it's either we get to normal trading, don't find the stupid traders getting in and pushing the price higher, and we just take their volume to sell at great prices. Option number 2, we don't sell anymore. We let those stupid guys taking over the price and doing stupid behavior with this, I mean going high with low volume. And if that's what's about to come, then just let it go, wait for the price to top up. And whenever the price will top up, you know the market will crash right after because of stupid behavior investors in there. They're just buying because they're thinking to sell at higher prices forever. And at some point that doesn't work out. And when that stops working out, it's basically doing this, flushing, and then crashing, which means we're going to go to the same prices either way. It's just I don't yet know what the market will pick as a pricing. Either we've got the rational decision, just profit taking, and in the end installing a bearish trend, or we just do it the stupid way by creating some emotions and greed and things like that, and we can pretty much add another 40% or 30% pricings to Apple. I wouldn't necessarily be surprised to see something like that, but obviously in the end it's going to be at the extended cost of a 50% drop. So we'll see how it plays out. As I said, I'm no magician. I don't know what the market will pick. All I say is that right now selling is the only rational choice for a speculator, but always, as always, a speculator cannot be true 100% times. If I have to be wrong, once again in here on Apple, and I've been trading this one short for quite an extended period of time. I've been shorting in here, I'm shorting again in there. I could be proven wrong once again, but that's no problem. As I said, I can be wrong 2 or 3 times in a row. That doesn't give a shit about that. All I care is picking that movement. And if we have to go higher pricings first, then the drop will be even bigger, and I'll make even bigger gains in the end. And that's all I care. So I'm trying right now, because we have some decent odds to see a 20 to 25% drop on prices on Apple. That wouldn't be the big of a deal. I mean, 25% lower than the prices, I think buyers can take it over. I won't be one of those for the reasons I've been sharing with you yesterday. I'm ready to buy Amazon, but I'm not going to buy Apple anymore, and not anymore ever. I mean, right now I think I'm going to buy the competitors, which are Xiaomi, for example, into the Chinese markets, which is, to me, going to take over some money, some of the clients, usual and standard clients that Apple is having for now. I think Samsung has already been taking a lot of those. So those who are getting out of Apple's hype are not going to get back to it. And I think that whenever let's say Apple has been diversifying lately. So now we're going to get into digging into Apple itself to see if it is a reliable long-term investment in the next following month. I mean, if we go to some price discounts, is it reliable to buy Apple or not? To me, the answer to that question is clearly no, for the reasons I just started to explain. I mean, the business model of Apple is not really a long-term vision to me. I mean, we're not clearly enough close to having a Tim Cook's vision like we had back then when we had Steve Jobs. Whenever we were back then, the guy was a creator. He was creating new things. I mean, Apple right now is not inventing anything. They've been trying to invent the Apple Watch, but believe me, some way, this is just pure bullshit. I'm not going to buy that shit for... it's not working the way they expected it to be. They kind of thought they will create a revolution. Yes, some people are buying those watches, but it's clearly not touching everyone like the iPhone did back then. I mean, iPhone was a revolution, sure was. And really, I have forever respect for the creation back then. It was really magic, all the way down from the design of the object to the selling process that had been made back then. I mean, really, Apple was a genius investment back then. I don't think that's the case today. And the fact is, whenever the hype is driving the prices, it's generally a short-term vision. And whenever I see this, I don't want to invest long-term on this. On the opposite side, I see Xiaomi that is just taking over Apple's model, which is just driving the hype, but at better prices. And whenever I see this, I see on one end Apple, very expensive prices. Yes, the designs are still great, but not innovative enough. I mean, it's like Apple made you believe that they created the bezel-less phone. Well, I mean, what the fuck? Xiaomi have been doing this 2 years ago. They created the first ever bezel-less phone, and no one heard about it. That phone was half the price of an iPhone. So, how do you think things will handle in the long run? Obviously, Xiaomi is going to take over Apple. It's not that Xiaomi is going to be bigger than Apple, but it's going to eat in the same plate, which means the clients that will go into Xiaomi won't go into Apple anymore. And that means Apple is going to make less profits. So I think Apple has to either diversify the activity or they're going to lose money. And so far, instead of diversifying, they've been share by backing. So I clearly see short-term vision into Apple, and that's not something I want to invest on into the long run. So the next big economic cycle, the one I want to put some long-term money into, as I said, I'm going to put the money into Xiaomi, which has a much longer-term view than Apple has, until Apple proven me wrong. So if for some reasons Apple is doing some big magic trick once again, I'm ready to put some money in there in the next cycle. But right now, from what I can see, they're just dead. And they're just dead cat bouncing. I mean, they're just not yet dead, but only those who anticipate things like I do can have some clues to see this coming. All I see is that Apple will remain a giant forever. I mean, they're not going to disappear, and Xiaomi is not going to be bigger than them. It's just that investing in them the next economic cycle wouldn't necessarily be a big game changer in terms of reward from the risk you will take. As paying Xiaomi for the same amount will probably get you much more rewards. Now on the opposite side, for example, talking about Amazon, because that's a question I've been having a lot recently. And for example, as I said yesterday to the French users, I think Amazon and Apple right now are in the same boat. They're trading the same way. They're trading historical highs at very expensive prices, and retail traders are having some interest in those. I mean, there's a risk in either Amazon and Apple to create that nasty speculative bubble out of retail traders. But I'm not sure that this is going to work out the way they expect. And if not, then those two will have to surrender the gains anyway, because they are very high priced and the profits are not there anymore. Even though the retail traders think this is going to go up forever and they're going to buy and sell at higher prices to someone else. I mean, just like the Bitcoins back then, it's nothing close to finding a decent pricings to the things. It's just seeing how we can go to sell it to someone dumber than you are when you bought it. So it's just exactly this. We'll see if that pattern plots in, but so far I don't see anything close to it. All I see is that, for example, Amazon, people have been trying to do it. They've been trying to buy the highs when we gapped up, but for some reasons we've been erasing all those gains and breaking the support right after. So we'll see about that. But from the perspective we had back then with Amazon, it didn't work well. So we'll see how Apple will do today, if it's the same fate that is about to come, opening at the highs and being sold instantly to close at the low. If that's what's about to come, then that would be another taking profit signal on Apple after Amazon, and after Facebook disappointed, after Nvidia is about to, after Tesla probably is about to today as well. I mean, if all the big giga caps are disappointing or being sold because of too high pricings, how do you think the massive indexes are going to behave in the next following days? So I'm still trying to figure out if we're about to surrender the gains and reinstall the neutrality, meaning the range structure into the big asset pricings, so the big equities market, S&P 500 and NASDAQ, for example. I'm just trying to wonder the same things right now. We've got the judge in between, which is still the gold, trying to figure out what the hell's at play. I mean, if Wall Street's about to restore neutrality, at some point the gold is going to be bought. It's obviously there. The money is going to flow out of equity into safer areas, and obviously gold is going to be one of those. The second option is just we're going to go to historical highs, and then the gold will probably have to go lower into $1,180 approximately, in where I think it will be really a long-term call to buy gold, just to get to a 30% reward after getting out. I mean, buying in here is just going to provide a 25% gain, and I really want to take this one. So if we're not failing in here and getting to reinstall the bullish trend, then I think this is where we'll do it. So anyway, I remain a bullish perspective on the gold. I just don't know if this is going to happen right here or right here. It just depends basically on what the US market is going to pick up. And either we're going to have that speculative bubble, and that's going to allow SPX, for example, and NASDAQ to eventually make new historical highs. But from what I can see right now, it's not working that well. We've got another index we have to talk about. It's the FTSE. And I think FTSE is not doing well. Have a look at the daily chart. We've been trying to create a bullish outcome yesterday. We just terminated a range. So we've been terminating what could be a wave 5. Not to say this could be a wave 2. Let's just try to see how things have been doing. But I think this is really a dangerous kind of pricing. And today's bearish candle isn't a good sign at all. So I've been reinforced today, and I've got the final reinforcements about to be in the market in the next few minutes approximately. But what we have right here is really a concern. The market's just falling apart. And I don't think that we're falling apart like that. I think we are falling apart like the kind that we'll keep on doing in the next following days. So we'll see about that. The range structure is still there, so it's still pretty much early to forecast the winning situation in here until we haven't reached out to the blue area and crossed it entirely. So this is where we actually get to the confirmation. But as you know, I'm a speculator. I'm taking the choice. Making the choice of putting more risk into that scenario and taking the reinforcements right in here into the speculative area. Of course, that means that if the market is reversing me one more time, I'll have to get bigger losses than expected. But I think right now is the price I wanted to sell. So I'm back in. The reinforcements positions have been taken right on that breakout support in here, broken down, and I'm about to take a second reinforcement in here. So to get fully leveraged on the FTSE, that will be a leverage 1.5 if I'm right, or approximately something like that. So we'll see about that. I've been lowering the stop losses above that market top. If we're ever getting there, I think I'm going to trigger some partial losses at least, not to say probably entire losses, and just get into a wait-and-see approach if for some reasons we were to get back there again. But I think right here now sellers are at play. They will not let us get there, and I think that's exactly what's about to happen to the SPX. I think everyone forecasts the SPX to go there in the daily perspective, and that we're obviously going to get to the historical highs. From what I can see, we've been selling those in here. We've been trying to get higher in here, and we're about to sell those either. Sell those as well, and we'll see about that if I've been proven right or wrong. But just to set things straight, this is what I said a few days ago. I said we'll probably get to test back the red area's top, and if for some reasons that price is sold again, and we have to break down that low, I think there will be no chances but to just cross entirely the range area in a straightforward line. So we'll see about that. This is really option number one. Consider it as a 50-50 scenario. I don't really know what the outcome will be. It's either plan A, we go there, plan B, we go to historical highs, and I really have no fucking clue. It's really a 50-50 scenario to me, and today will be the game changer, depending on how the market will plot Apple and how we'll take Tesla today. If Tesla, for some reason, is showing good results and is bought, and if Apple is bought as well, probably money is going to flow back into Amazon as well, and we're probably going to have an upward move, leading to higher highs on the SPX. Option number two, which is failing all of those, surrendering the gains and getting to the lower areas of the range. Okay, regarding the forex market, here as well we're suffering from what we are trading and the distortions that have been induced by the equity market, as we had some really strange distortions throughout the entire equity market. That is a market that is supposed to move together. I mean, all assets, a risky asset and shares and companies should be moving together as the money is flowing in and out of risky assets. But recently, in the latest few months, actually, we've been having some really strange distortions, literally benefiting a lot to U.S. equities and flushing money out of the entire asset market aside. And we'll see about that. And it's kind of a binary action. Now, either the U.S. market was wrong and is going to surrender the gains very brutally and basically flush all the dreams out of investors' head. Option number two is that the other markets will just keep on following right now, and that all of those assets will go to the upside, but we'll have some very narrowed potential into the SPX and US equities. They've been benefiting from the first distortion, and they're going to lag on the final part, just as we've done and explained previously regarding the Bitcoins and altcoins. It's just the exact same pattern in here. If that pattern is about to keep on going, so just to set things straight, we're going to apply the same strategy in here. Where did the distortion started? To me, the distortion really started right here, where all the assets have been moving upward since Donald Trump's election. All the global assets, global share assets, and then this is in all around the world, have been moving accordingly to the upside, all together in there. And then things started to switch. US kept on going up, where other assets have been consolidating. Some of those have even broken down the previous supports, as US equities are just fucking hell crazy higher pricing. So we're going to see how about that. But I think here is the point the distortion has been starting. Okay, so we're going to take the Fibonacci time, and what's that giving us is the fact that if this is 51%, okay, so this is the way you want to do it, okay? You're going to drag this until we get 61% here. Means that the end of that pattern should be right here. Once again, no magic timing. We're just applying a pattern. We started to decorrelate in here. Okay? And this might be the tipping point. If I'm right, it's the point where equities were just slowing their pace, getting in there. Okay? So it's going to be this. For example, the scenario, as I said, in which equities will just keep on moving toward half of 2019, in which things will get dirty. Means that in here we're just going to top up regarding US equities, where all the worldwide other equities will just perform and taking on the lag they've been having during the last few months. So we're going to just keep on the pace, slowing the pace on the US, but extending and moving faster into the other assets all around the globe, just to get back to US levels, and then in the end everyone will have to suffer a downward cycle. That's one option. That's an option I've been forecasting. So I wouldn't be surprised to see this. But to me, this option is no longer possible, because we cannot create a bubble. Otherwise, that means other assets around the world will go even faster. So if you got my point, US have been benefiting from the distortion since then, and it's going to suffer from it ongoing from now, and we'll see about that. But I think that if you have to buy some equity pricings, you don't want to buy Apple, you don't want to buy things like that, you most likely don't want to buy SPX. You might want to buy some German index, for example. You might want to buy some Eurostoxx 50, who've been lagging a lot. And it might be the game changer. Just like right now, I've been buying altcoins instead of buying Bitcoin. Okay, it really is the same pattern that I think is about to be at play in the next forthcoming weeks and months. So this is a weekly scenario, and that could lead us potentially to, as I said, April 2019. And if, for example, we were about to project near this is what I've been saying, probably going to have a year ahead of profits before surrendering all the gains and taking a crash pattern, triggering, meaning that in the end we'll have end of economic cycle. This will be the big short. And if that's what's about to come, then I think we're going to have it near those prices. So making new highs, lowering the pace, finding the sellers, and big short at play. Okay, so just have this mindset into your heads. If you are forecasting to make long-term investments or even mid-term investments, it's not the case right now to get into buying US equities, just more likely taking the gains if you've been trading the long-term trend, or just buying something else if you want to buy mid-term to short-term, because I think this is not where the gains will be. Everyone thinks that the strongest one is the one that you need to buy. That's the most stupid choice you can make right now. Buy the cheapest. This is what a rational choice will be. So if you want to buy equities, I suggest you should buy elsewhere from the US and just let the US go and keep on moving higher highs, but don't buy the historical highs of the SPX. It's probably going to be a trap. Doesn't mean you're going to take a loss. Just means that the benefits you could get, the targets, the reward are not going to be enough to take the risks of, for some reason, some days something going wrong and just you're working up with a minus 20% market. It's plausible, okay? Everybody thinks this is not possible. Let me tell you, first, it is possible. Secondly, it is highly probable. So don't be too aggressively bullish whenever the risks in here are very dangerous and present. It's not like the perma bears who are trying to scare you forever. I think right now we've been piling up many risks, and at some point those risks can show up. And you won't have clues of this. So don't take risks unless you have the reward that goes along. And I think the rewards are no longer there regarding US equities. You have some potential rewards to make, for example, in the Eurozone area. Not the FTSE. FTSE is the one you don't want to buy. Okay, it's been profiting as well, as you can see. FTSE has been going high forever, never ever retraced. So this one probably is going to suffer the distortions just like the US, even more eventually, as this one is really showing signs of recessions into the real economy. So it could suffer a lot more than the US. But for example, look at the Eurostoxx. This one has been really slow pacing recently, and I think this is the one that could produce some really nice gains. If for some reason we were still to keep on going on a bullish market, I think this one can produce a 12 to 15% gap, 15% reward, meaning making new historical highs on the Eurostoxx 50 would be decent. And if that's what's about to come, then this is where you want to put your money, and not in there where, these are the two competitors. Just to set things straight, Eurostoxx 50 is the equivalent of the SPX for the US economy. So you got one side where you can expect, for example, 4 to 5% gain top, and another side you got a minimum of. The minimum will be to make 9% gains out of the current prices, and you can expect to extend into historical highs. So that really is a 9% minimum, and I forecast probably to have 15% rewards into the next following quarters. So leading to half 2019, just like I said, could have a pretty fucking decent bullish move, outpacing on the euro area because we've been lagging in terms of growth, and we could have some outpacing in here. And this is, I think, where you should put your money. This could be a wave 1, wave 2, and we could be ahead of a big, nice wave 3, where the US equity was just being slowly topping the long-term trend. Okay, so that being said, we're going to stop in here. But anyway, that suggests for some reasons that I think the EURJPY is going to drop fucking fast, because increasing risks means the yen is going to be researched, and the euro outperforming means the euro will probably drop. So I expect the EURJPY to trigger the scenario as expected. I think we're going to go lower, and that is what is probably going to be the biggest market cover for US investors. They are going to sell their euros, and they're going to try to buy yen to assess the risks of remaining into US equities. So I think for a US investor, this will be the best ever cover to sell the EURJPY. This is the reason why I'm selling this one. Just on a daily perspective, what you have right here is clearly wave 1, wave 2, and we're about to make wave 3. So we'll see about that. But in a daily perspective, I'm searching for sell entries into EURJPY, and I'm either going to do it if we break down that support or if we get to that resistance. Okay, so I'm narrowing my my scenario in here, but either way, I'm going to get fully leveraged on the EURJPY in the next following days, either by breaking down that support or getting to that big resistance I've been highlighting. You can take USD GPY, but I think the big loser will be EURJPY. Then I have GBP-USD. I think is about to trigger bullish whenever the FTSE is going to fall apart. I mean, this is going to be an opposite move. Right in here, we've been doing a very complex wave 2. I think like that. Kind of a wave 1 terminating in here actually is 1, 2, 3, 4, 5 situation. We're about to terminate wave 2. It could be a triangle, could be a whatever structure this is, but I think next wave anyway. So it could still go lower on the GBP USD. I wouldn't necessarily be surprised about that to see anything like that, like a wave 2 pulling back in here, but I think anyway, either we're creating a triangle or we're creating an ABC structure, means that if we're about to create a triangle, then the momentum is just going to lose its strength to get an outburst to the bullish side. Or option number 2 is we're still having a bearish impulse to make, probably testing that support, but that's it. I mean, whenever we'll have done this, anyway, afterwards it's going to be a wave 3. Wave 3 is obviously going to break resistances, which means we're going to break this one and probably this one as well. So I think next target is right here, the 38.2% retracement. Not to say it could even go higher than that. It's just we'll see how deep it can go. But if I have no clues about sellers playing in here, I'll still let go with the GBP USD. I think this one is a long-term scenario. It's been taking a long run to get it validated. I've been buying since then. Since we were right here on GBP USD, okay, I've been buying, taking partial stop losses, buying, and I think at some point it's gonna produce the gains I was forecasting. It's just that I had to suffer the dollars messing around for a long time. But I think anyway I'm gonna be right in the end. It's just this is caused of US distortion, but at some point it's not gonna last long. So we'll see about that, but as I said, Forex market is still trying to figure out if the distortions introduced in the US equity market is about to terminate. And if that's the case, I think VIX is going to go higher. I think junk bonds are going to be sold. I think gold is going to be bought. And I think that Forex is going to restore normal trends. I mean, this is nothing close to normal pricings. I already said that. It means that anytime it's going to restore and return to the mean, which means GBP USD is going to be bullish. And I think it's about to start pretty soon. AUDNZD as well as a scenario that has been messing with me recently. We've been going up, down. I really don't know what to do. I don't want to reinforce right now. I think I'm waiting right here to be sure that this consolidation is over. I wouldn't necessarily be surprised if all those other catalysts were driving the price lower. So as I said, I've been taking partial profits, obviously at the worst possible prices. I've been taking the gains in here, right at the bottom. So that's not good. Not a great decision I've been making out here. But I wouldn't necessarily be surprised to see that thing just keep on consolidating for a longer time period. So right now, it really is like, I don't really know what to do with that shit. This shouldn't really have happened. So it's either this is being restored as a support and we're going to break resistances, or we're just going to mess around in here, create some noise, and eventually get lower in the end. So in order to restore my trend scenarios on AUDNZD, I want the price to reach out to the resistance again, which so far we haven't. Now having a look at other assets, I think having a look at Tesla is going to be important right now. These are the positions I have on Tesla. So far it's doing great, but big danger today. We'll see about that. I think normally we're in a breakout situation. We've been pushing to divergence, which means we're terminating the first bearish impulse, but normally we still have a break to end of trend signal to make. A breakout obviously have to break a support. I think that support has to be broken down with that ongoing trend, which means I forecast the price to still reach out to the target I was expecting. Probably we're going to stop in here. I think this is where I forecast the price to just stop. So we're just going to use the usual analysis tool. I'm going to get in here to there and trying to finding out where the volume has been standing back then. Okay, So really not a game changer. Okay, we don't have that much volume. It really is hard to forecast. I think in here we got something interesting some way. So I'm just gonna watch out for that price. Not necessarily gonna take the profit on there, but if for some reason we were to find some bullish signals up here or down here, sorry, I think I'll have to make a quick look and have a deeper look into that price. So I'll see if in here we've got to find something. Otherwise, just keep on pushing to the Fibonacci target right in here to take the profits. Of course, if we were to go there, once again, I'll have to invalidate the trade, take a tiny gain instead of a really huge gain, but that will be that's it. I mean, right now, if we go there, I'm taking the loss no matter how. So I'm going to put invalidation in here, and I'm going to set the stop loss there. So it's just like that. If we go there, it means we invalidate the breakout, even though it's a totally valid one. If we go in there, it means I'm triggering the stop losses. It's going to be a gain, because I've got the average price right here, so it's going to be a stop gain, and we're not going to lose anything in here, but I will just lose a fucking huge gain if for some reasons I wasn't about to be taking profit and being stopped out instead. So it's a wait-and-see approach right now, seeing what Tesla will do with its earnings release and how the market will pick them. It can invalidate that breakout. I wouldn't be surprised to see this. In that case, we'll have made wave 1, 2, 3, 4, 5, bearish impulse, terminated. But normally the A wave is breaking down the support, which means right now we'll really see the price breaking that down just to set things in motion for the next bearish waves to come later on. Okay, so wait and see. Finally, you got General Electrics. This one is fucking really solid. I've got two options in there, so I'm going to share those. Option number one will be building a triangle, and that would be the best of a choice. So if for some reasons we were to fail again in here one more time, and then breaking down the support, I'll take partial losses, or not to say I'll eventually get out entirely from General Electric to eventually buy at better prices later. But I think we're going to break it down, and anytime we're going to break this means I'll get to trigger reinforcements position and get fully leveraged on General Electric for a speculative trade on top of the long-term trade, which means I'm going to keep some General Electrics for a long-term trade. Probably, as I said, 6 to 12 months. And I think if for some reason we were about to make the bullish scenario out of the US indexes and get to new historical highs, I think the safer areas in the index are going to be invested on by the investors, and I think General Electric would pretty much be one on top of the best investments to come in the next 6 to 12 months. So this is something I take multi-month perspective, not long-term perspective, just let's say 6 to 12 months ahead. So it's kind of a mid-long-term perspective in here by buying General Electric, which could just go right up here or even higher than that. So it's probably a 60% gain to probably 100, I mean doubling the pricings. So we'll see about that later on. We need to see that wave three first, and making sure that this is a wave 2 consolidation. For now, it can look like a triangle, but I want the price to erase that possibility first to get into fully leveraged position. So I'm going to take the questions right now and finish that show. So, not that you knew it, but the E structure with a cliff, BTC dropping like lead again. But hey, we had a month of fake pumps and plenty of FOMO news, so manipulated, so dangerous. Yes, I agree with you. This is what I think, and that's what we talked about, the distortion pattern today. It's generally not a good sign to see some distortions like that floating in. It means that someone or someone's, because it's generally just, all you have to say is that when this happens, big money is at play. It doesn't mean that this is just a one guy doing it, nothing close to it, but generally somebody is playing that game and others are following it. It's just the way it is. I mean, generally when you get to trade with money, you know that everything is basically a shared knowledge between those who have real amounts of money to trade. And for some reason, I think this is what happened. I mean, there's a scenario ongoing. We still yet don't really know what's at play. All I can tell right now is that this distortion is not the sign that obvious things are about to happen, but most likely the opposite. They're going to get into complex trading just to give you false clues, false tracks, to get to follow to and to wrong foot you in the end. So it's pretty much, generally when you've got those distortions, it's really hard to find out what the final outcome is.
But generally, it is to go the opposite side with a decent pricings. It means that it's like the U.S. equities. I think the final move is to go to the downside. It's just that right now we're just manipulating to just set the scenarios into foggy situations. So like those who are selling will just get wrong-footed at first, but even though they will be right in the end, it's just that they will be wrong in the first time by selling too early. Just like I've been doing. Those who will sell with too many leverage, they're going to be stopped out, ruined, yet in the end the market will collapse. So I think patience and being aware of those, like I said, trading a manipulated market or the price distortion, just call it however you want, is a pattern, is a context, and you have to trade it accordingly to that context. Whenever you face potential manipulation, you keep on following the initial scenario. You just don't change. You don't go from bullish to bearish. If you've been buying, you keep on buying. But you don't pile up the trades. You just try. If you're wrong, get out. Try again. Get out. Try again until you get it to work. And whenever you get it to work, just fucking double down the position sizing. You just, when you found the tipping point in which the manipulation is going to reverse, you want to put some damn leverage on this. But first, stage your highly level of speculation, which means you damn lower the leverage accordingly to this, waiting to find the tipping point. Whenever you found it, just put the money in and let it go. Means you're probably going to be right, but all those who've been doing it the opposite side, putting leverage into speculative trading first, will just be ruined and not be able to take the money after the manipulation. Okay, so if you're into manipulation, don't follow the manipulation by reversing the position. Just patiently wait to find interesting timings to try trading against the manipulation. And if you're proven wrong once again, just get out and get in again. Get out, get in, get out, get in, until you get to the right position. Whenever you got it, you just pay. Option number 2, if you don't like risk, when you have to identify that pattern, you just wait for the pattern to complete. Which means whenever you have the bullish reversal after a bearish manipulation, you get in. When you've got but you wait to have bullish breakouts. That's the difference. A speculator like me with a high level of risk is going to keep on trying inside the manipulation until it gets to the right tipping point. Someone with less risk appetite will just wait. I mean, in those manipulations, you have those only 2 choices. Either you wait or you keep on trading with low leverage. And you just don't pile up the losses. That's never ever possibly going to happen. If you hold on to your losses and piling positions one on top of each other, you're just going to hide and raise the leverage, and you're going to hand into dangerous stop losses or margin call or whatever that is going to ruin you in the end. Oh, okay. Now the videos are spaced during the day. I have to watch each when price action is going wild. I just don't really get what you're talking about, Alexis. But can you be a little bit more specific? Maybe I can eventually consider putting the videos a little bit earlier if that's what you were talking about. But I'm not always about to do it. I mean, it's taking a huge amount of time out of me, and for some reasons, on some mornings, I wake up later. I mean, that's one of the benefits of being a trader. You just can wake up any time you want. And for some reasons, I want to get some extended rest on some day, which means I'm waking up later. I'm starting to record the French review later, which means I have to record the English ones even later, which means I cannot publish on the expected time scale. Yes, when I say 3% loss, means that regarding the entire amount of liquid asset I have invested into speculative trading, I'm losing 3% of that money. This is exactly it. This is probably what I'm going to lose in the goal if in the end I'm proven wrong. But if I'm proven right, and if the goal was actually a manipulated asset, believe me, whenever it will reverse, I get to gaining a lot more than those 3%. But if I have to surrender those gains, I'll do it, and that won't stop me from trying once again later on at better prices. So if that area is not the right tipping point, I probably have to surrender a 3% stop loss in order to try trading again the next bullish support. And whenever we'll get there, I'll get to trading again, and I'll get to probably have the tipping point in the end. And whenever I get the tipping point, it's not a 3% gain that I will take. It's probably a 30% gain that I'll take. So believe me, I'm not going to stop here. It's just a matter of time until I get right. That's how I see things. I mean, I can be wrong in timing. That's not a problem. That's something I'm used to whenever I speculate. But at some point, I'll be right. There will obviously be bullish gains in there. The market can be trending on the opposite side of a normal trend. It can do for an extended period of time, but at some point we're going to have to pay for it, which means we're going to have to reverse, and I'm going to take the gains I expect to take. I'm wondering if your indicators made some sell signal on altcoins or not in the last few days. No, they haven't, and that's why I'm not selling them, and that's why I think the market is again just playing against you. We're under price manipulation. It's clearly this. I mean, price distortion. Just as I know, manipulation is messing with some people in here, so I try my best not to use that word. But that's how I've been calling that pattern forever. So that's hard for me not to call it the way I think it is. So anytime I say price manipulation, call it price distortion. Okay, just do it that way. If we do have price distortion, the way I think we have in the cryptocurrency sector, with the altcoins not following the Bitcoin, but for some reasons about to faster the pace in the next following days to keep on retracing and retracing down the lag they've been putting out of Bitcoin. If I'm right on this, that might be the reasons why the indicators have been showing any signs of bearish activity on those altcoins. So from what I can see, the cycles are not bearish, even though we have some very strong bearish attacks on the price. So we'll see about that. Obviously, the indicators can be wrong, but as I said, the advantage they have out of me is that I can be biased. The indicators cannot. They are called blooded, coded indicators. It's just code. I mean, code can be wrong. They're just doing what it's told to be done. And this way, I've been creating complex indicators. They can be right, they can be wrong, I don't care. But if they are showing and confirming what I think this is just doubling down the fact that I just could be right. It's increasing the risks, it's narrowing the risks to be wrong. Okay, it's increasing the potential of me to be right. And whenever I think something and see the indicators just going the same way, I just don't ask too many questions. Okay, I just respect the strategy. If I think the context is this, if I find a potential technical framework that suggests this context might be at play, then if I find any confirmable signal, I just go in. I mean, I don't overthink things forever, but that's how it is. Now, what about XPTUSD? I don't even fucking know about this one. Why is this so down? Do you think there will be some bullish move in the future? Is this metal doomed forever because of low demand? So I don't know what the fuck XPTUSD is, but we're going to try to make just a price analysis out of it. XPTUSD. Oh, okay, it's platinum. Okay, I thought it was another crypto asset. So, sorry about that. So yeah, it's platinum. And regarding this, it's another metal. It's not a precious metal, but it's under pressure like all the metals are. But from what I can see in here, this one is nothing close to bullish or bearish. As you can see, you got bullish, bearish. It means this one is a range trading. So you just get to put your fucking range trading scenario at play. You just do this, and you put the algo. Okay, so basically, as you can see, it's been working just fine. So right now, we're right into the dome area. You don't get to trade in here until either you break up the red area, that will be a bullish signal, or you break down the blue area, and that's a bearish signal. But I think right now, it's just ranging price action, trying to figure out a trend. And from what I can see, just like in the gold, I think this is about to outburst to the bullish side. But I'm already buying gold and silver, so I'm not going to buy platinum as well. But that could be a decent choice, actually. But not right now. You've got nothing close to buy. You're right into the dome area, which means either you're buying in that area or you just wait for the red area to surrender. Whenever the bears are surrendering, we mean the bulls will gain, which means we'll have a bullish trend. Okay, so this is what I'd like to see right now. Actually, we've been manipulating those fucking metals for too long. We've been making A, B, C structure. Now I think it's over, or nearly about to be. If that is the final range, I think in the end we're going to extract from the bullish side, but it's just a matter of time. Okay, So from what you can see right now, it's not necessarily the big scenario. We've got bullish momentum versus bearish prices. We're in a weak bullish cycle, but yet a bullish cycle. So as I said, really suggesting we might be ranging that the outcome could be bullish, but we still have some potential to the downside anyway. So I wouldn't necessarily be that big of an aggressive trading in here. Could be some kind of one more bearish extended wave to just trigger some stop losses. But from what you can see, we've got nothing to trade about this as the fact that we don't have a historical price out of it. Let's see if we do have those. Yes, we do have historical prices. So we're going to do the analysis, okay? This is something I haven't traded, but I'm just going to apply the strategy in here. As we do have historical prices, we're going to do a review of what happened back then, just to find out, try to find what if we have additional informations. So let's do the job. Okay, this is what we traded back then. We've been trapping some bulls, trapping some bears in there, as the bulls have been taking over that price area. So this is where the bulls have been at play back then. It really is clearly simple to see this. Okay, they had some bearish signals, broke them up. So this is where we find aggressive support. Double times the bulls have been putting in. Right here we've got red blue triangle out of the taking profit pattern, but then exit momentum. So this is where the bulls got in. The bulls got in right here. They tried a pullback in here once again and triggered the bullish reversal. So this is the bullish control area. We're going to extend visibility to price number 2. We're going to do, okay. So now moving on. All we do is I'm going to get into deeper price study into trying to find out where we have left the volume in there. So I'm going to take the low to the highs ahead. Just going to have to wait for the volume profile to build up. Why isn't it building? I mean, we have volume profile in here. Should be able to have something there. Okay, so apparently we aren't. So anyway, I'm just going to do it simple. And this way we're going to use a trick. We're going to zoom in to get the volume profile to do the job. I know it's a little bit dirty, but that's how we do it. Okay, here we go. So we've got the volume pickup in here. So we're going to set first burst in there. Got another pickup in volume in there. So normally I should just zoom in there to get the real pricings. Okay, so this is definitely where we would like to trade. Okay, and I'm pretty sure that this is what we're trading right now. As you see, I don't know the actual price. I don't really remember what current prices we might be testing, but I'm pretty sure we're testing near those prices. So we'll see about that. Fuck it. As you can see, I'm not just some kind of miracle trading or just applying a damn good strategy. I'm just applying a damn good strategy. We're working that support as a resistance right now. We're working that support as a support, and here long-term bulls are supporting, which means I think at some point we're going to break up that resistance, and whenever we'll do it, this will be a strong support. So I don't see the price heading much lower, and if we do go lower, we'll just get to test that price, and I probably think that this is already too late to get there, because we're just going to try figure out something new in here. Just going to get back to historical prices. We're just zooming into that tail in here and see if we have some volume left in there just to play the risk taking. I'm just going to try zooming in as far as I can. Do we have some volume left over in here? Please show me something. No, we aren't. As you can see, if we have left some volume in here, for some reasons we could have gone there just to test that volume again. The last time we've been lefting some volume is in here, which means going lower makes no sense, just about to break it down. So it's either we're going to break multi-year lows into the metals, or we're just going to buy those prices and reverse the trend. And that's what I think. So if you want to buy platinum, I think that's a decent choice. But you know how to handle the risks. You just put a stop loss below that price. If we're getting down there, you don't want to remain a buyer of that market. It means we're going to break multi-year lows, and I don't think it's nearly close to happen. Okay, so I think we have a trading scenario in here. Last time we've been exiting in here, buying. I think we're about to do just the same. So if we go lower, it's to go. I don't see any target to go lower. So if we're going lower, you have to trigger a stop loss below those prices, which means regarding the current prices, it's a 10% stop loss just to get the fucking multi-year reversal, which means we're going to have to break that high afterwards. So the target for the metals in here to me,
And platinum especially is to get to 40 to 50% gain later on, which means 50% gain out of a 10% risk, definitely something that you want to trade. And if you have been buying the lows, the stop loss is even narrower than that. I mean, if you're buying right here, the stop loss is just 7%. To get a 60% gain, probably we're going to get to those prices. So it's a 55% gain just to break up that resistance, or at least breaking this one and getting to this one. Okay, so let's say, for example, we'll have to make a taking profit number one in here, but that's still a 34% gain on this. So this is a long-term scenario. It's not something that's going to give the gains in 2 weeks. It's going to take multi-months to get there. But I think anyway, that bearish trend is about to reverse. And this is why I think the gold is about to reverse as well, and all those assets also. We're nearly reaching the down points of buying metals, and I think this is going to take the gold, the silver, the platinum, anything that you want into some potential long-term bullish reversal, or let's say multi-month reversal, to at least stabilize the price into that big range. Bottom, resistance, and just gonna working out that price area. All right, so I hope I answered your questions, and now we're gonna just separate each other and see each other tomorrow. Bye, guys.